Welcome back to Alpha Recap. Jordan here. We're coming to you after the close with the top market moves and the news that mattered today. As always, if you have questions, you can reach us at stockalpha.ai. Let's jump in.
Thanks for having me. Lots to unpack. AI partnerships, healthcare policy shocks, and some heavy volume trading that kept desks busy.
Okay, quick roadmap. We'll hit AI infrastructure and edge compute headlines first, then the industrial adoption gap and cybersecurity angle, the healthcare policy warning that caught the market's eye, and finish with the flow names and volume-driven movers. So, what really stands out here is...
Right. The tech stories were front and center. GMI Cloud announced a compute collaboration with NVIDIA focused on GPU-based inference. At the same time, a startup called femtoAI reported strong first-half growth and some dramatic claims about a sparsity accelerator that could change edge economics.
Give listeners the take. GMI's tie to NVIDIA. Why did that matter after the bell?
It mattered because NVIDIA remains the anchor for hyperscale GPU ecosystems. GMI's collaboration signals continued demand for large pools of GPUs for inference workloads, not just training. That supports the narrative that cloud scale and inference are moving from lab experiments into commercial deployments. I mean, when you step back and look at this...
And femtoAI. They said 5 times revenue growth in the first half and touted something called a dual sparsity SPU that could yield up to 100 times power gains and use about 10 times less memory. That sounded huge. Walk me through what that actually means in practical terms.
Yeah, those are headline numbers. In plain English, sparsity is a way of making neural networks do the same work with fewer active computations. A sparsity accelerator like the one femtoAI described is optimized for those sparse models. If their claims hold in real-world deployments, devices at the edge, think phones, sensors, cameras, could run advanced inference with much lower energy and memory needs. That widens the set of places AI can live without a full GPU.
So, what really stands out here is they named Samsung and Marshall as customers. Does that make the claims more credible?
It helps. Customer names suggest partnerships beyond lab demos, but the real test is scale and repeatable deployments. OEM adoption is the key. If Samsung starts embedding these chips at volume, revenue and margin proof points would follow. Until then, analysts note these numbers are inputs for scenario models, not confirmed run rates.
There was also corporate AI rollout news. GSE Worldwide working with extraordinary AI to scale internally. How does that fit with the hyperscale versus edge story?
It's complementary. Large enterprises are building capabilities internally while also buying cloud services. That means demand could flow to both hyperscalers and specialist vendors. Right. And the other thing is, internal projects sometimes translate into vendor contracts down the line, which could help cloud providers and systems integrators.
Quick reaction segment. Are we seeing momentum, or is it still mostly promise?
Momentum, but execution matters. Announcements are encouraging, but deployment timelines and contract details will tell the story. Watch for milestone updates from GMI and more OEM confirmations from femtoAI.
Switching gears, the industrial side. TakePoint Research found fewer than 8% of OT and ICS companies reported robust AI deployment. That feels like a reality check.
It absolutely is. Industrial control systems and operational technology are conservative for good reasons. Safety, reliability, legacy equipment. That adoption gap suggests a runway for cybersecurity and systems integrators, but also signals that near-term revenue upside may be limited until integration cycles accelerate. Honestly, I was a bit surprised by this one.
So what should listeners watching industrial AI be looking for?
Look for vendor earnings that show actual deployments, M&A activity focused on OT cybersecurity, and any follow-up studies showing adoption inflection points. Firms that solve security, integration, and regulatory hurdles will have an advantage.
Now the story that really shook healthcare. The American Association of Orthopedic Surgeons warned that the Centers for Medicare and Medicaid Services proposed the calendar year 2027 physician fee schedule could destabilize independent orthopedic practices.
That's right. the AAOS flagged that even percent-level changes, they cited an example of about 3.25%, can materially compress margins for independent practices. That could accelerate consolidation as smaller groups seek scale or sell to health systems. Consolidation tends to benefit large integrated systems and payers because of negotiating leverage.
So what's the market implication? Which companies or sectors were sensitive to that warning?
Policy risk becomes a cross-cutting theme. Small specialty providers and healthcare services names could see pressure if reimbursement moves are finalized. Larger hospital operators and insurers may hold relative advantages. Analysts note, the key items to watch are the formal rulemaking documents, the public comment timeline, and the responses from hospitals and payers.
Quick reactions. Right. Short hot takes only.
Policy moves are slow but powerful. This one could reshape M&A and valuations in the sector.
Okay, markets closed with some big flow-driven moves. Let's run through the highlights. Give listeners the numbers in plain terms.
Sure, AT&T finished the day up about 1.5% to roughly $22.27 on heavy volume of about 139 million shares. UiPath slipped about 1% to around $12.04 on very heavy volume, roughly 177 million. New holdings climbed about 2.75% to roughly $14.38 on volume near 146 million. Meanwhile, a popular Bitcoin futures ETF finished up about 2% to roughly $9.01 on huge volume of about 443 million shares. A microcap called June's traded extreme volume, about 346 million shares, and rose about 3%.
Those are huge volumes. Trading desks must have been busy.
Absolutely. High-volume names attract liquidity-driven flows and short-term traders. Earnings, analyst notes, and filings were proximate catalysts that amplified moves. For example, there were Form 144 notices filed related to 3M that referenced a $179 reference price. That kind of filing signals potential insider selling and can add supply pressure.
And on the analyst front, RBC raised General Motors' price target from about $92 to about $107, citing pricing strength.
Yeah, that tracks. Upgrades like that recalibrate valuation benchmarks across an industry. Analysts' moves influence sentiment and models even if they don't immediately change fundamentals.
Rapid fire. Other corporate briefs to note?
Home Depot coverage focused on rate sensitivity and pro-segment growth as near-term drivers. American Packaging Corporation highlighted a focus on personal care flexible packaging and mentioned about $115 as a notable data point. Watch peers for demand signals.
We should also mention the cross-cutting themes we saw today. AI narrative dominance, two-speed adoption, policy intersecting with fundamentals, and market microstructure driving volatility.
Exactly. AI headlines range from hyperscale partnerships to edge innovations. But industrial OT adoption lag means uneven near-term revenue realization. Policy moves in healthcare could re-anchor valuations and M&A dynamics. And on the market micro side, several names with outsized volumes mean amplified swings around catalysts.
A couple of quick reaction lines. Short, please.
Momentum is real, but timing matters.
M&A and consolidation. Big theme.
Liquidity drove the day. Big flows, big moves.
Before we wrap, what should listeners watch for tomorrow?
Watch for any formal updates or comment summaries on the calendar year 2027 Medicare Physician Fee Schedule. Follow any GMI or NVIDIA follow-ups for deployment timelines and commercial terms. Company-specific. Replay or commentary from AT&T's second quarter earnings call. Follow-up comments from UiPath and additional femtoAI partner rollouts. On the industrial side, scan OT and cybersecurity earnings or M&A chatter for adoption signals.
Final takeaways in a nutshell. Go.
Policy matters. The CMS proposal is a top cross-cutting risk for healthcare services and could accelerate consolidation. AI is bifurcating. Hyperscale GPU demand sits alongside promising edge innovations, but OT adoption lags. And volume and flows drove a lot of today's moves, so liquidity and filings are important inputs for risk models. Analysts note all of this as data for further diligence, not as instructions to trade.
Good. Quick reminder, this episode is for informational purposes only and does not constitute personalized investment advice or a recommendation to buy, sell, or hold any security. Analysts note the items covered as signals for further due diligence.
Thanks, Jordan. For listeners who want deeper reads, keep an eye on follow-up announcements and the rulemaking timelines we discussed.
That's it for today. If you have questions about anything we covered, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. See you after the next close.